One of the world's largest central banks is potentially about to shake things up. What ramifications does this have for yields across the world and, more importantly, for the US stock market, which has been on a massive run recently? Well, after the Dow has snapped its longest winning streak since 1987, what tends to happen next? Today we talk about where we are in the markets right now, why this chart is so important for us to be watching today into the next week, and of course, if we get two rejections on the Qs, what happens next? Let's talk about stocks, commodities, and cryptos together right now. Well, welcome back everybody to the Daily Show, where we talk about the hottest charts, the macro data, and of course the lead indicators. If it's your first time here, welcome to the community. We're talking about big volume today and unusual moves that have happened in the markets. Definitely subscribe and smash that like button if you find value in today's video. Well, let's get into the beginning of rotation. So we saw a lot of stocks really running through the session, and then they all started falling. What we spoke about in the previous video was a potentially unusual large 3x trade that went on the bull S&P 500. Could that have been sellers up in the right-hand corner? Well, as of the last 24 hours, it seems more likely that it was. And of course, we'll be watching this week's close with great anticipation. The SPY also has a bunch of cluster trades on it, whether they're buys or sells, still to be determined. But what we're seeing is around $6 billion of transactions there at those points. Very important closes happening this week. But let's talk about where we're moving into. Not only is the Bank of Japan potentially threatening yields that we'll look at some important levels for the US later on, but they're bringing in the chance of greater volatility. And do we see volatility at these times of the year? Well, according to pre-election data on the VIX over the last 24 years, we've generally seen a spike happen around this period of time. We've also seen usually a gradual increase in the VIX over the next 2 months. Basically, August and September are the most volatile periods of time for markets. And it really brings into question whether we're going into the normal thing that happens for the S&P 500 over the last 20 plus years of pre-election years. A weakness into strength in the end of the year. So far, we've been following a pretty similar track. We found weakness around February and March, and of course, we sold off with the OPEX over here. Another one to watch will be this particular event, which is the OPEX in September. Remember, that has some of the worst data around it for the week after and the week before. We'll be talking about that more on the channel, so make sure to subscribe if that type of stuff interests you. But there's a lot coming up with some interesting information coming out. Let's take a look at rotation. Well, it was all about semiconductors, technology, and communications for most of the session. Then by the end of the day, though, most things had sold off, although semiconductors held very well. And that's a market that we've been looking at, seeing whether it breaks to a new high or not. We will cover that later on today's show. We also see 5-day rotation being very strong towards technology and a few inflation plays. Energy in particular has been picking up nicely, and financials, and they've been running the market. When you look at the Dow, a lot of the big strength here has been a rotation into those sectors. Are we starting to see a bit of a rotation out of tech, which is consistent with actually a new bull run, but more importantly, money flowing all around? We've been talking about staples, healthcare, utilities on this channel, showing some strength, though now over the last 5 days, they've basically flatlined. If we do start to sell, we'd like to see those sectors in particular start to pick up a little bit more. Let's now move into the charts and talk about the biggest key ones. And this was the big mover thanks to the Bank of Japan's tentative potential policy change. We'll talk about when that's happening. Generally, it's around 2 o'clock to 2:30 p.m. Australian Eastern Standard Time that they announce it. But this would come as a surprise. And it's really the fear of the unknown that always freaks the market out. So we talked about the inflation concept, that we're seeing inflation trades come back in, or maybe they're just recovery trades. Financials, energy, materials. Well, if we have a look here at the US 2-year, we've been talking a little bit about the idea that if we break past 5.1%, we enter into what we call the unknown of yields. And of course, if we see an acceleration of yields, which we've actually been having since May, when that enters the fear of the unknown, that's usually a big symptom of a market to sell off. Bulls will be pretty happy as long as it stays below this point, but bears, you should be watching around 5.1, 5 to 5.1 with a closure this week. So all eyes are on this over the next 24 hours. Definitely set alerts and be aware of it. Another one is the dollar index. So we talked about how this base over here was getting some selling. We've talked about the idea that the market would move towards that 101.60 to 102, and it looks like it's going towards there at the moment. And dollar index, of course, loves an increased yield. So that really encourages people to buy US dollars. And in particular, that's what we've been seeing over this big announcement. You can see the reaction that it had, a huge candle that came out of nowhere. Imagine if it actually becomes true. We don't know that yet, but of course it will be a shock to the markets. That's taken an effect on gold. We know that gold hates yields increasing. So if yields do go outside of 5.1%, it could kind of hurt our bull thesis here on gold. We did see a little bit of a pickup for scalpers that were around in this area. Then it went up to near the highs, which is usually a break-even level for anyone that's done something like our day trading masterclass. And in this case, it would have been a break-even trade and it sold back off. At this point, though, we're moving towards that big level, which is around that 1925. And with gold, we're also watching very closely the gold miners. So the stocks have come down quite nicely after their big rally up. Around this area here is filling the gap after that impulse. So for GDX miners, they're actually coming back into exactly the level that we like them. And we will do a special report on these over our weekend video when we're back with hopefully a good microphone as well. Yes, thank you very much for putting up with me this week. I know the sound quality hasn't been all up to scratch, but don't worry, we're back in the office as of next week. We're doing these while we're traveling, unfortunately. It's a little bit harder, but I do appreciate each and every one of you out there, and hopefully the content has still been quite good quality. Let's move over to Meta, some stocks that didn't hold the highs. We got a gap fill here on Meta, so that's a big check. And this thing was flying in after hours into the open, but it was sold into the open, and it failed to hold above the previous high. So at this point, it's very hard, other than to say, it's sold off, to say there's another momentum switch to the next level. And this is kind of the problem we had with Google as well. If you look at Google, it hasn't held a green above this line here yet. So this is the breakout level of 129.23. It of course pushes Google into the idea of hitting $140. At the moment, that's still theoretically the trend, but maybe we need to watch how this weekly ends up closing. A very interesting 24 hours here for this stock, which has shown some very big resilience in comparison to some of the others, such as Amazon, Apple, and Microsoft, which are all on basically double rejection style candles, including Microsoft. Let's now look at semiconductors. They rallied up, came back to the highs, and then sold the high again. You could argue there's kind of like an island reversal with an island reversal reverse to the bull side now. 20 moving average as well is something that we're watching. So you can see here the 20 moving average has not been closed below this entire time. So we'll be watching this because, of course, the 20 is one of the most important moving averages, and if it closes below, then gets through that 140, I think that a lot of swing traders will be involved in a mean reversion short play. At this stage, the trend is very murky here for semiconductors at their all-time highs, and yeah, very strange last 24 hours. But we all know that if we get a closure above these wicks now, we should be going in for another squeeze event. And that could be what we call like a really big blow-off style top, where we get these huge injections of money. It just all gets ballistic, and then all of a sudden, bad things tend to occur after that. Maybe we even get an all-time high. But these particular wicks all need to have alerts set on them. So let's have a look at our magma, which has been set up a little bit wrong here, but you can see the point, which is basically we have rejection wicks. Will we close to a new low here this week? Will we even hold this wick down? The next 24 hours is very important for these markets. And there's so many things going on. We've got treasuries moving hard, the yield increase across the board from the 2-year, 10-year, etc. That, thanks to the Bank of Japan, that sent shockwaves through treasuries. Treasuries dropped 2% back down into these heavy support lines of around 98. If it becomes clear and we start to clear 5.1% on the 2-year, the 10-year will also be going up, or at least there'll be significance there. And we could push all the way back down to lows with treasuries. We do like treasuries over the medium long term here on the channel, but the problem with them is always going to be if we have this secondary inflation spike. And do remember, we talked about this, Bank of America, JP Morgan, and Goldman Sachs in their internal communications have been discussing this idea that year on year and in general, inflation is going to increase over the next couple of reads. We've seen trades that go with that type of analysis, but also we've now got treasuries and US 2-year starting to react that kind of way. Another one was copper. We saw copper reject the highs again. We know that at this stage it's still mostly in a downtrend. We've got that big trend line coming off the back of copper as well, which comes through these lows. And we're really just waiting to see more here on this particular chart in terms of what copper does next. For Tesla traders, it was pretty interesting. Basically, we have a rejection here and the market's just sold off from this level. It was very tough to really figure out too much other than when you put 20, 50, and 200, which is what these moving averages are. You can see it came back and kind of found a ribbon sell on the 2 hour. At this point, we're probably moving back down to around 242, especially once we make a new low. So we make a new low under 254, you've got to think we're going to 242-ish. And if you're a bull, you're looking for a new low and then a bull past 272, and that should push us to 300. So we've probably got a couple of activations here moving forward for Tesla over the next couple of trades. Let's jump through now some of the markets. We'll start off with the US markets today. These were all really interesting points. The US 2000, the Russell 2000 hit 2000, pretty much to the dot, and then sold that zone, making a new high, tagging those previous resistance points, then sold directly. And that actually sold earlier than the whole Bank of Japan saga. It hit it and then started selling off. The NASDAQ went to a 61.8 golden pocket, 78.6, and then basically sold straight back down to the new lows. Now, if we have these lows taken out, this is significant because look at the daily candles we're getting here. Big rejection candles. These types of rejection candles are usually consistent with somebody effectively sweeping liquidity. So they allow the markets to pump up, and then that's their kind of go-to for selling into it. And with some of the unusual reads we've seen from the SPY, from also 3X funds, and even some of the transactions we saw thanks to the rebalance, possibly these have been sell levels for these stocks. We'll need to see more. We get these weekly closes, and you can see if we go to a weekly chart now, the double rejection wicks that are there if we get the close. Make sure to subscribe, watch the weekend video. We'll get a lot of information coming out for these markets. US 500 was kind of similar. We had a nice rally. We got multiple new highs. We were melting up, and then all of a sudden this market comes down with a big smash, and it comes all the way back in to that previous low. Is it on support right now or demand? Yes. For buy the dip buyers, they're going to be excited about this level because, of course, it's another defended area that's been defended quite a lot. So certainly something to be watching for bulls across the board. The NASDAQ, the Russell, and the S&P 500 all sitting back onto their supports. But if these levels are taken, and in particular for the S&P, we're looking at 4,500 getting taken, swing traders could really be back in this market towards that mean reversion. So we're watching both sides. At the moment, you would say the next 24 hours, you're looking at that kind of defended buy area. However, you'd have to have your own activation methods on the smaller timeframes. Let's go around the world now, and we'll come over to the DAX. So the DAX actually took the highs and went all the way back up and actually made a new high. So this came off that 16,000. That was a rocket ship. It hit that 16,000 to the T and then just went boom, straight back up. The bulls are just so elastic. Every time we ever find any area where the bears would be like, yeah, if we push it a little bit further, we'll get that control. The bulls just say, hell no, that's not going to happen. And it was another rally up. Nothing coming out of this German at this stage. But if you actually look at it on the surface, of course, we talked about this as a potential Wyckoff. It took the high again. So is that like a UTAD steal? And then this is the actual low that we need to be looking at, which we talked about before, and actually just swiped that low last time. Very interesting case here on the German market. I think quite difficult to trade. And again, we're breaking out on other markets as well. We had the Dow that's done one of the best runs in recorded history in terms of individual days. And then we have the ASX 200 as well, breaking out and getting closer to new highs. So it's clear that the rotation has been into older style stocks, energy, financials, those types of industrials as well. Those types of stocks have been doing well. The Dow finally snapped back its huge run. And remember, this is a significant run. 1, 2, 3, 4, 5. There's so many days. I think it's like 14 days or something in a row. So because there's so many days, it is due for a pullback. It's statistically likely. How deep that is, we'll find out. But of course, if we start breaking these levels from the S&P, from the NASDAQ's perspective, thanks to the Bank of Japan news, even though we've already known about this for a while, kind of, it could be just a catalyst that drives us down. We'll have more information as we find more unusual volumes for you guys and the options data on our weekend video. Let's move over to the Bitcoin saga that's going on here, which has still continued to be weak. So we saw Bitcoin get underneath 29,600. That was a big deal. And now we're kind of looking for it to move into that 28,000 bracket and then maybe find some buyers through there. We've done some work on this. And of course, a lot of people are now starting to call for 25 and 26,000. It does look weak. It's rejected twice off the role reversal, which is where this support is. So we've got 1, 2, 3, 4, 5, 6, so many supports, and it's rejected those. If the market comes back through and hits past 30,400, we know that this was false and it's going to rally pretty hard. I would say it makes a new high. But at this point, it's looking short. And of course, that's the evidence that we have on these charts. There's so much to go through at in the markets at the moment. We will be bringing you a special show for the weekend. So thanks very much for bearing with us as we traveled around. Do remember there's still a bunch of news coming out. The Bank of Japan press conference generally held around 2 to 2:30 p.m. It says tentative, but I know it's usually held around this time, 2 to 2:30 p.m. And that is Australian Eastern Standard Time. So you might need to convert that. That'll be pretty much in the night or the very deep night of the US. And then we have here the core PCE price index, which is 8:30 a.m. New York time. So that's going to be the big read for, of course, the Fed. The Fed always looks at that number. Revised UOM consumer sentiment after that at 10, which won't matter as much. But yeah, the core PCE, the Bank of Japan, a little bit of a spanner in the works into this earnings season. And of course, we kick it all off again next week with even more earnings and some big ones at that. Very interesting times. Most companies now have been beating expectations. So that went from being slightly under to more positive this week as we've gotten more data. Next week, we'll really put the nail in that one. And then we'll have to find out what this Bank of Japan situation is looking like. What will be the catalyst? It's always one of those ones that just comes out of nowhere. And maybe sometimes we even know about it. In this case, we already did know about it, but we don't know what they're going to do yet. Thanks so much for watching. Subscribe, smash that like button. Bye for now.